How you doing?
Good, man. It was a pretty good day trading, actually.
Are you trading anything other than Fannie Mae?
Yeah, I bought IBIO today at 260.
Nice.
Sold some at 330, holding the rest with a $3 stop.
Damn. I bought
Yep.
it. I bought it and I got out because it was scary. I bought it at 262.
My average was 265.
I beat you.
Yeah, yeah, but where'd you sell?
269. Yeah, what?
Hold on, I'm firing up my charts right now.
Bryce says Jack needs to stop sharing his screen.
Why?
I don't know. To see both. Click stop. Hey, there you go. So you're just trading IBIO while like out of the corner of your eye watching your Fannie Mae?
Yeah, Fannie Mae's having a red day today. Sucks.
Dude, what gives you the confidence? Why don't you just sell it when it can't break two? What's your goal?
My goal is higher than two. So I'm just
Wow,
gonna
so detailed.
I moved my risk up. Okay, so I moved my risk up to a level, and I'm going to see if it can hold that level. And if it can't, I'll exit my position for still a good win. But I'm going to give it a chance to break two in the next couple of weeks. It seems like
What's
it's going
your
to need to consolidate for a while.
I appreciate the patience. I think it's amazing. I don't have it. You're doing things that I could only dream about. But I'm curious, when you do look to sell, are you going to look to sell it in like 1/10 increments or 1/5 increments? What's the goal?
Probably just piece out like 20,000 shares at a time.
Gotcha.
Yeah.
I'm trying to do the math. I'm trying to keep up. I have like this $700,000 number that I've come up with Fannie Mae and SOUN. Am I right?
What do you mean 700,000?
Between Fannie Mae and SOUN, you're up roughly 700 grand in the last few weeks.
I think so. Yeah. I mean, I've taken some losses for sure. Like I lost some money on the Donald Trump stock yesterday.
What? How do you lose on that? You
I
shorting it?
bought, no, I bought it at 70, like 230, and then it just dumped all the way down. And then I ended up having a really bad cut price.
These short squeeze stocks are scary, man. It's crazy. Like even, did you see CZOO today?
Yeah. Super liquid.
Yeah,
Trading
it
really
literally
weird.
it was jumping like 50 cents a share in like a minute. It was crazy. I'm typing
Yeah.
out the alert. Like I'm in at what did I get? 1090. And I click send the alert. And literally I look and it's like 1150. And I'm like, oh my God. Like it moves so fast. I got out in the
Where'd you end up selling
1170s.
that?
What?
Where'd you end up selling that?
1170s. I gave it time. I was trying to be patient. I gave it 15 minutes and it felt like an eternity. And, like I see this is why you can grow more facial hair than me because it ages you, you know? It's like a aged fine wine, but it was an intense 15 minutes.
IBIO looks like it's going to go higher.
It was so weird this morning. I was like, right near the open, I was like, breakout. And then even before I clicked the word breakout, it cracked like 50 cents a share.
Yeah, so I was buying the big slams on this thing because that's where they're trapping the shorts. So I was buying it in the 270s after it went over three, and then I
Yeah.
was buying it in the 280, and then I was buying it at 250 and 260. I just kept averaging in with a stop loss below 250, and it actually held my stop perfectly at
Nice.
1135,
Okay.
and then it just started ripping, and then I sold some into the high day clear out, and
Nice.
then once it came down and held 315/3, I figured I could move my stop loss to that area and see if it can push into the fours or maybe even fives by end of day.
Damn.
Yeah,
Aggressive.
yeah.
You see GCTS?
No, I didn't.
Type it in. Look at it. You're gonna laugh.
GCTS
Yeah.
56 from 9. What is this? A
We got a
semiconductor?
There's a student in the challenge who bought it at 15 and they're stuck in it because they're under the PDT rule and now it's in the 50s.
Huh. I've
So the
never seen
PDT
anything
rule,
like that. I didn't even know that that stock was up.
it's dude, it's such a weird market. I can't even keep up with how many like plays there are. You saw me, I was trading, Krispy Kreme yesterday.
Yeah, D nut.
D-Nut and it like tanked today. And I think the lesson here is just ride it while it's hot because these things from one day to the next, it's like a total different animal. Like DJT was squeezing beautifully, then it just sucked. Like I feel what do you think about my thesis where there's so many shorts in DJT and a lot of these plays and they're just like, that's the market, where the shorts are going, what's happening to them.
Yeah, I think it's about where they're getting caught, you know? So it's like stocks that should be breaking down, like what Stratty kind of talked about in his webinar, which I really liked. And
Yeah.
it's like you just look at the price action, and if it's weak and then it starts to get strong again, you know kind of that there's going to be some buying because longs plus shorts are going to come in to buy to cover, and you can see a nice move up.
I'm glad you brought that up because a lot of people are seeing these squeezes a little too late and then they're cracking and people want to dip buy them. And I'm like, no, 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 no. These stocks are up on the short squeeze. You want to buy them while they're in their short squeeze. After the squeeze is over, the shorts are just getting more aggressive and pounding it into oblivion.
Yeah, yeah, that's how it goes.
So it's a little different than like the typical dip buy. Like a lot of you guys are confused because you just treat all stocks similarly. Like, oh, this stock is up today, first green day. The first green day should have a catalyst. It should have a reason to keep going. It's not just like a green candle. Like if there's a green candle, yes, technically it's a green day. But Jack, do you buy just random green days?
No, I mean I really like stocks that have like a good daily chart pattern and also have super high volume with a good catalyst. I don't like stuff like CZOO, for
Yeah,
example, because it's trading super thin, so it's hard to manage a position on it because the spreads are so wide.
true.
So right
And
now, yeah.
And the reason why you hate it is why I love it because I had 1,500 shares making nearly, a dollar a share, like 80 cents a share, which is really good for me. Easiest $1,000 I've made in quite a while. I have a video that'll be posted tomorrow too. I got it on video.
Oh, nice.
Yeah. So, you guys have to understand like this is something that we've seen like where Jack says like it's illiquid. And so some of you with like $2,000, you're like, oh, it's illiquid. Jack is not trading with $2,000. What it might be illiquid for Jack because he can't take size is very different for us, common folk down here, the plebes, right? Like Jack is up in his castle and he's like, eating all the finest foods. We're the plebes on the streets just like begging for a crumb of like bread.
I don't know if that's it, but okay.
I'm not necessarily talking in terms of food. You couldn't handle the world's number one restaurant. Let's not forget. Jack went to the number one restaurant. He was dead the next day. Some
Yeah.
people can't handle these food tours. But the point is where some of you guys, I understand where Jack is saying, like, okay, I want more liquidity to take size. I want to be patient. I want a multi day setup. For me, what's really been working the best because of my impatience, because of my travel, because of, frankly, just how comfortable I feel, I'm taking these little scraps on plays like Sizu, even IBIO, where, I mistimed it. I still exited with a small profit. DNUT yesterday, I mean, ended up actually spiking $2 a share from my entry, which was crazy. Jack, did you get a Krispy Kreme? Be honest. After I started talking about Krispy Kreme, did you get one?
No. Did you?
No.
I'm trying to save up for Japan.
Fair enough. Fair enough.
Yeah.
That's good. We got some good stuff. But Krispy Kreme is delicious. But, frankly, again, some people have messaged me, why is DNUT tanking so much today? It gets over extended. Like yesterday, I didn't think that it was going to spike $2 a share from my entry. I thought that the trend would keep going. The McDonald's deal is nice, but it really kind of like took away all of the shorts. And I guarantee you, some shorts were just getting squeezed, and they're like, screw it, let me cover. But then once those shorts are out today, there's nothing left. So you have to understand, like, when you're looking at a short squeeze stock, ride it until it stops, but don't expect like after the squeeze for there to be much strength, because a lot of these plays like DJT, like DNUT, after the strength is gone, it really just doesn't come back. The dip buys work better with non-short squeeze stocks. The dip buys work better like with Fannie Mae. I was dip buying Fannie Mae the other day, at 170.
Mm-hmm. More organic run-ups, multi-day run-ups.
Yeah. And the dip buys work because, some people miss the run-up, so they're waiting for like an opportunity. Some shorts are shorting along the way up, and then if it comes down, they're looking to cover. So you have to think about, why are these patterns happening? You can't just buy all dips. You can't just expect all stocks to be the same.
Yeah.
And by the way, throw out any questions. We had some questions that I tweeted. My question for you, though, Jack, is, what do you think people who are starting out should do? Because you have your strategy, but you've been doing this for a while. What should new people focus on right now?
New people?
New people.
They should focus on learning a little bit of everything and seeing what fits with their personality, seeing how their trading goes, and really find out what they're good at. And you found out what you're good at. I found out what I'm good at, and we do what we do, right? But as a beginner, you don't really know what you're good at, what you're bad at, what you like, what makes sense to you. You got to kind of dabble in with small risk and learn.
Well said.
What do you think?
No, I agree 100%. Like, a lot of people want it to just click automatically. And then I think it's actually even worse when it clicks. If you like nail a pattern and you're like, wow, this is perfect, but then you just focus on that and no other patterns, and it kind of stunts your education. If you look at it kind of like life or like sports or celebrity, like when there's like a sports star and they win all the awards and they get all the money right away, and they end up going broke in the long run because they lose perspective. Like a childhood star in Hollywood, they get all the success, Macaulay Culkin, Drew Barrymore, Jonathan Landis, and they screw up because they didn't really put in the time to earn it over time. And when it comes too easily, myself included, like when I made $1 million overnight, pretty much in my first like 2 or 3 years, I didn't understand the true, risk management that's needed, the true path, the ups and the downs. And I don't want anyone to get like that skewed education. I would rather you actually struggle and have success. Obviously nonstop struggling, you're just going to quit, but have a little success, have a little struggle. And that way you're always optimizing, to put it in March Madness terms. I'm very happy that UConn didn't blow out, Northwestern the other night. Were you watching that, Jackie boy?
No, I didn't.
So UConn, number 1 overall seed. We're both Connecticut guys. Donovan Clingan is actually like right from next door town to like Jack Kellogg. They live in like pretty much the same small borough of Connecticut. What?
Bristol?
Yeah.
I didn't grow up in Bristol.
Yeah, it's like 20 minutes away from you, though. It's the same area. Like you could have like thrown a football and it would have like hit him because he's tall. Anyways, we've been blowing out teams left and right. And it's very difficult because you can get too cocky when you're just blowing everybody out. Northwestern actually put up a good fight. UConn went cold from the threes. So we won pretty easily, but we also got the good lesson. And I think that's the best thing, where you can't expect this always to be easy. You need to understand you always have to optimize. Even when you find a pattern that's working for you, by all means, focus on that, like Jack is with Fannie Mae and SOUN, but he's still trading IBIO. right? Like, I don't think you just have to trade one stock or one setup. You really got to focus on growing your education, especially in the beginning.
Yeah, I agree. Very well said.
And then it gets easier. Like some people are like, oh God, it's so tough. Like, this is a really good market to learn a bunch of different strategies. Short squeezes, dip buys, multi-week winners like Fannie Mae. It's pretty cool. Let's ask a few or answer a few questions. Will IBO be a one and done after today, 1 day spiker? I mean, you never know. Like, what do you think, Jack? You're still in this, aren't you?
Yeah, I'm not sure. I'll know better towards the close price. I think it just depends how the price action looks into the close and into early after hours. You'll kind of be able to tell. So I think if it trades between 320s and $4 and kind of closes around this price, it might have a chance to gap up and push more tomorrow because it hasn't blown everybody out yet. But if it has a big drop underneath 3, or if it has a big spike into the 5s, I think that would kind of solidify there being potential for more weakness tomorrow. And it could end up fading if that happened. But I'm watching it, seeing what happens. Like I said, I got my stop loss in and already sold a good piece of it too. So just trailing the rest.
And that's kind of a good example where if a stock goes up too much in 1 day, like DNUT or DJT yesterday, there's just not much more strength that could, come right away because all the shorts get blown out, all the longs, are already in it. So for me, like if I'm ever trying to have patience on a play, which I don't have right now, like right now I'm just taking singles galore. Nice nearly $30,000 month for me. Just really lots of small little $500,000 wins. I'm very happy with that. But if a play goes up too much, you got to be a little scared. Notice what Jack said. You said what? If it goes to the 4s or the 5s, you might get a little worried.
That it won't continue.
Yeah.
Yeah. It
That it
just
like,
depending on how aggressive if it has as aggressive as a spike from when it spiked from 260 to 340 with only one 1 minute red candle in that whole move for 10 to 15 minutes. If it does something like that, then a lot of the shorts are going to be out. But if it just can keep consolidating in the $3 area, they could make the shorts feel comfortable and then blow them out in after hours.
And that's the thing, right? So, like, if you're trading a short squeeze stock, you got to think what is going to lure in the most shorts so that they can get blown out later. If the stock is spiking so much now, the shorts aren't going to get blown out later. They're getting blown out now, and there's nothing left. So if I ever am patient on a play, like on a play like let's say CGC, like I was on Friday, where I'm entered in the low 7s, and I know multi-month resistance is 8, and it's touching 8. I'm not going to hold because I think this is already best case scenario. Obviously, CGC, Monday morning went up to 9.5, but then it went all the way down to 6 before now. Are you watching CGC, Jack? It's crazy.
Yeah, I've been watching it. I keep missing it actually. I don't know. I've traded this thing in the past, and I usually don't have really good reads on it.
Yeah.
I personally I miss the stocks like Buds, Can, Nugs, like those weed OTCs. These bigger, choppier Nasdaq ones
Yeah.
are just not something I really want to day trade. Now, maybe if I bought the stock in the 3s or the 4s and it was a swing trade, it would be a lot easier for me. Even like ACB. You can see like the hammer candles that we talk about all the time from 319, 320, and 321, the dates. Buying that somewhere in the mid 3s and then kind of selling some piece into the $5 area. And maybe you're still holding for a little bit more of a move, but actually day trading CGC and ACB, I find to be a little bit difficult and unpredictable for me personally.
Wait, Jack, can you go back to sharing your screen? Because it's not as important to see both of us. Let's see the charts that you're talking about.
Okay. Yes, I can share. Can you guys see my screen?
Yeah, I can see it.
Okay. Yeah, I mentioned here on ACB, we had couple green days, a little bit of a volume increase relative to what it's been doing the past few months. And then you saw the hammer candles, the buyer here, here, and here. So buying into any one of these hammer candles, especially this one, resulted in this big spike up. So like I was saying, my trade plan on this would have been to be buying it into the mid threes, risking maybe 330 or so, the key level down here, and then selling some into the spike, and then maybe still holding a small piece. And now maybe you can move your risk to about 390, if that makes sense. But with CGC, why I don't like this one is because I shorted it this day, and I ended up taking a pretty nasty loss. As you can see, it opened at 15 and it went all the way to 19. So I covered near the top once it broke over this high, and then it dumped all the way down. And I ended up having a pretty bad trade on it too. But once again, like, these hammer candles are really the best trades on this thing. If you're buying into these hammers, it results, both times it resulted in a big spike up. So that's kind of the trade that I saw and I missed.
I like it. What would you call those hammer candles if you had a name for them?
The jackhammer.
Yeah.
Yes, sir.
No, I'm pumped. And you got some good things. Like, this is the thing. If Jack or I miss a play, or if it doesn't suit our personality, we just don't take it. I see a lot of FOMO where you think like every play is going to be good for you and your profits, and it's just not the case, right? Like, the longer you're in this game, you'll start to say, I don't like this pattern. I don't like the way this trades. And you start to weed out plays. And that's really part of your education. But you don't know what you don't like unless you actually trade it. So you're not just going to know what you like and what you don't like immediately. You really have to explore and you have to learn. And that's why we say trade with small size while you're learning. You can still get the education, whether you have 100 shares, whether you have 1,000 shares, you're still going to learn through experience what is better for you and what isn't.
Should I get into the presentation?
Yeah, 2 more questions. Jack has a little presentation. I like that. I see some questions for me. I can take those later.
Tim, you lost your Kardashian lips.
I did. Thank you for all the well wishes. I literally, like, this is the stupid stuff that happens to me. I thought it was like a disease. I woke up. I'm like, oh my God. Like, I thought it was an allergy. I was just at like all of these crazy restaurants where it was like, who knows what ingredients I was eating. And it turns out, like, I didn't even think about it, but I did shave the day before it blew up, or 2 days before. And like, I felt like a cut, but I just put some like, some rubbing alcohol on it. I didn't even think of it, but it got infected somehow. And that's what led to everything. And it was crazy. I was in Europe. Europe has like a lack of antibiotics. So I'm going from pharmacy to pharmacy. No one has what I need. It was a mess. So I'm better now. I didn't intend it to take over my social media and DMs. I got like 1,000 DMs. People were like, this is crazy. And it was, I didn't intend for my lip to get that big, or like, the whole subject to get that big, but I'm glad it's better. I feel for you Europeans. I've never, this is me being a spoiled American. We never have issues with like what kind of medicines we have here. One last question before Jack gives a cool little presentation for you guys. Keto Speculator says, for Jack on IBIO, can you explain why you started buying in the 270s and what gave you confidence it wouldn't crack 250s?
Sure. Yeah. Let me go over this trade. I think it's a pretty valuable lesson. So first of all, let's start with let's start with the news. Okay. So if you scroll down on the news here, you can see that IBIO and blah, 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 blah. All I see is AI drug discovery collaboration to rapidly develop antibodies for obesity, blah, blah, blah. But I like the AI drug, okay? And I can see that there is a constant buyer in the pre-market. As you can see, a very steady buyer from 7 a.m. all the way up to 9 a.m. And once again, it didn't really let any of the shorts out right away. So keeping that in mind, let me get back to the 1 minute. So I didn't have any plans to buy the stock, but once I saw this type of price action, so they had like a morning spike, right? And then the shorts are kind of getting in and it's going down, and then very, very weak bounce, and then it slams again at 946. So at right here, this is like the most bearish price action you can get, but we get a little bit of a rebound, and then the stock has a squeeze, kind of makes a double top right here, and then pulls back again, holds the previous slam candle here at 250. So that's my first note of 250. You can see 250 coming into play here, and into play here. So I know that 250 is a key level, and I know that $3 is a key level right here. And then we kind of blow through three, and then it slams again. And this is where I bought it, because at this point I can see the volume that it's trading: 2.4 million, 1.6, 1.7, 700,000, 900,000 shares, 600,000 shares. So it's just churning volume. And when stocks churn volume and they are very trappy, that's a buy signal for me. So I can't. Okay, there you go. So getting back into the chart, then I bought a little bit right here, just a starter position. And then it kind of came up. And luckily, I actually had a sell in here at 330. So it swiped up really quick. And I sold just partial position at 330. Which gave me a little bit of a realized cushion, making that 50 cents per share, keeping my risk at 250. And then it came down, and I added those shares back. I sold at 330, and then it slammed again. And I figured this is kind of where it had to hold. So I added a little bit more right there. And then as it kind of chopped around, I ended up kind of losing faith in it, especially at this 1130 candle. But once again, held 250, held 250, held 250, created some nice little hammers right here. So a steady buyer kind of came back in, ended up adding some right here. And I'm just like, you know what? If it breaks 250, I'll be done with it. And it ended up not breaking 250. And I put my stop loss in there, and I went away for a little bit of a walk. And then I came back and it started to squeeze. And then we saw this shooting star candle right here. So I sold some shares, and then we hammered. So I was like, oh, this might push higher. And then we just push higher, and we just kind of just been consolidating. And then I put my, like I said, I put my stop loss in this $3 area, and just going to see how it closes and decide what to do with my position. But that's really all I did.
Are you ever worried with your stop losses? You know, you put them at the level, but you know, if they get taken out, they just get turned into a market order. Are you worried about like the slippage from that at all, or no?
Not really, no. Because my average is so good on this. So my average is like 265. Like my average is right here. So if I'm stopping out into the $3 area, like for it to slip all the way down to 265, that would be, you know, very hard on a stock that's trading 150 million shares. So
no,
I'm not too worried.
Not much slippage. I'm just thinking even like 10 cents a share, given your position sizes, that could be like a $20,000 walk.
No, I don't have 200,000 shares.
Or it could be like a $5,000 walk, you know?
That's fine. That's part of playing the game.
And your walks, right?
Yeah, it's just part of playing the game. Slippage is necessary, so I always kind of plan for slippage.
I like it. No, that's good. It's important for you guys to see that. Versus me, where I don't like slippage. I don't like walks during the market. I don't like slippage. You got to find what works for you. For me, it's like, again, I'm picture like the homeless guy on the street. That's me as a trader. I'm like a homeless trader. I'm literally homeless, but also I think like a homeless person where I'm like, I'm just trying to get the scraps. For me, that slippage would crush me, just not even crush me financially. It would just crush me mentally. I don't want any slippage. I was really happy like with my CZOO making 80 cents a share, zero slippage entry or exit. And that's how I've grown my accounts. But Jack, bigger picture, doesn't mind a little slippage, focus on taking the meat of the move. And that's why he can be more patient with more size. So there's, you know, millions to be made either way. You guys tell me, I'm curious, before Jack starts a little presentation that's going to change your life. But before that, leave a comment. You tell me, are you a scrapper or do you like patience? S or P? You tell me. Yeah, and by the way, flights actually helped me on CGC. I wouldn't have held for, nearly $1 a share on CGC. Like that was a crazy roller coaster. I'm on a flight, the Wi-Fi is going on and off. I'm like shaking in my seat. There's no wrong answer, okay? The S&P 500 is S&P. So you can be a scrapper, you can have patience, you can try a little of both. This is the beauty of trading. It's not an exact science, but with so much range and so many plays, there's so much opportunity. Like, even if you have a full time job or a part time job or you're in school, all right, one answer. You don't need to put multiples. We get it. Um, the point is, you can make trading work for you when there's this many plays. If you go back to like 2022, there weren't as many plays. It was pretty depressing. You couldn't really be patient. You couldn't really scrap. Like it was just sad. Do you remember 2022, Jack?
Yeah, that year sucked. Last year sucked a bit too, honestly.
And now it's
But
just like crazy. Like every single day, you want to try to get as much time in opportunity as possible because there's literally, I mean, if I broke it down, I could probably do like 2 dozen trades today. Not that I want to, but that's how many solid opportunities in range,
yeah, you're
range
right.
plays there are. But without further ado, ba ba da ba 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 ba. Jack Kellogg has worked hard on his student presentation because he desperately wants to go back to school and feel like he, is a great academic, like his parents always dreamed for him, but he never came through.
Did not. All right, can you see it?
No. Yes. Whoa.
Can the room see the presentation?
Say yes or no in the chat room if you can see the presentation. I can see it, but I don't know what that means. You see, Hanlon went courtside Miami Heat last night, by the way.
Yeah, I spent like 20 grand on it.
That was his first courtside. Have you ever sat courtside, Jack?
Never.
Whoa, that's something we got to do. Courtside is amazing.
If you insist.
I do. We'll do it.
Okay. Are you guys ready or what?
Can everyone
Okay.
see it? Yes. Bring it on.
All right. So this is a little presentation I made. So right now it's just called trading strategy. Okay. It's basically my trading strategy that I've been going over on the webinars week after week, talking about on the watch lists week after week. It's been, well over 6 months now. I've kind of been teaching you guys what I see in the market and how I operate. Okay. So here we go. This is why I use this trading strategy that I'm about to get into. And it's because it has the highest potential return with the least amount of risk. Okay. So when I'm looking to buy stocks for swing trades, when I'm looking to take big picture ideas, you're often getting into stocks on a very tight consolidation area where it's kind of just churning or they're making hammer candles or whatever it is. And the upside potential, you never really know because in the market, we've seen so many stocks go up and up, forever. And they just keep going way further than you think. So that's what I mean, because when you're shorting, it's the opposite. Okay. So when you're shorting, you're kind of, you think you're going to be right, but the amount of risk is huge. So for me, as I mature and get into my 8th year of doing this, I don't want to take the insane risks anymore of short selling. I don't want to put my back on the line and be super stressed out about if I'm going to lose it all essentially on some stupid short selling setup. Okay. So really, this is the trading terms that I came up with that I think is very key for people to understand when you're learning my trading strategy. Okay. So relative volume, candlesticks, hammer candles, shooting star candles, multi-day, week, and month breakouts. And let me just get into the next slide here, which goes over all of these terms. Okay. So relative volume. As you can follow along on the chart here, I said increased relative volume right here. So as you can see on the chart, there is a little bit of volume being traded back here. But as you can see, the average volume candlestick is probably like what, 5 million shares. And then all of a sudden we just start averaging like 50 million, right? We're having some days where we're trading 200 million, even more than 200 million, it looks like. But on average, you could probably say this is between 50 and 80 million on average. So we're doing 10x at least of the average volume. So that is massive relative volume. And that's what's going to create an opportunity to make money on a swing trade. The next thing that you need to understand on the candlesticks, okay? I go over every single webinar. You need to understand a candlestick is formed based on these 4 things that are very simple, okay? So if the candlestick is always going to open on the bottom body if it's green, and it's going to be opening on the top body if it's red. And this is going to change for whatever time frame you're looking at. If you're looking at a 1-minute candle, you're going to see 1 minute, opens, closes, highs, and lows, and it's going to form a candlestick. Same thing with a 5-minute chart, or a 15 or a 30 or a 60-minute or 4-hour or daily or weekly or monthly or quarterly. Okay. It's all the same thing. Where does it open? Where does it get down to the low? Where does it close? And where's the high? And like I said, the differentiation of the green versus the red is the green, the close is going to be higher than the open. And if it's red, the open is going to be higher than the close. Very basic stuff, but still just want to go over it for all of you, okay? Next is hammer candles. And this is something that I've been talking about for many webinars, okay? So you have the open price right here, and a hammer is when you see it dip down and have, a panic kind of, and you see a big buyer bring the stock all the way back up and close it near its highs, or at least closing it, 75% up of the dip. And that shows you how many people are interested in buying the dip and supporting it. And you can also see that that's kind of what traps shorts, because if shorts are shorting and it's going down and then it just bounces right back on them, they're going to have to cover eventually at a higher price, and then more buyers are going to come in. So a hammer candlestick is something that's very bullish on a stock chart. Shooting star candles, it's an inverted hammer. It's the opposite of a hammer candle, okay? And this is what you're looking for when you're looking for topping action, okay? When you're looking for topping action, you're looking for a stock to spike and there just to be a seller there, okay? And there's a seller, sell, and it slams down. And this is what you can use for an indication of topping price action. And really, these 2 candlesticks are something that I've personally made a lot of very good decisions based off of. If I'm seeing these type of candlesticks, it's telling me who's in control of the stock. Is the sellers in control or the buyers in control? Here you go. Like, just to put into terms of some candlesticks that we saw. So you can see we have a little bit of a hammer right here. A little bit of a buyer on these 2, but not as clearly as hammer candles. But then look at the shooting star candle here at the top of HMBL, the best OTC supernova of 2021. But this isn't even the chart. This isn't even why I have the stock up here, okay? This is just an example of a multi-day breakout. A multi-day breakout to me is not a stock that's breaking an intraday high, not a stock that is breaking out over yearly highs. It's very simple. It's a multi-day breakout. So you're looking for something less than 10 days, 7 days of trading, and you're looking for a breakout over that level on the daily chart candlesticks. And then right here, this is Fannie Mae. This is a multi-week breakout where you have consolidation for weeks and then breaking out over that price action. Same thing. Once again, let's talk about the shooting star candles towards the top and the hammer candles towards the bottom end of the range, okay? Just throwing it in there. Here you have a multi-month breakout where you're breaking out over months of price action. So SOUN, the $5 right here, where it double topped at, and you got that really nice multi-day breakup aligned with the multi-month breakup and breakout. That's why you saw such a significant move on SOUN from the 3s to the 10s. And look at this, holding the former resistance, now support. So very good stuff. Here are some order types that I use, okay? This is basically the level 2 box you get when you open up eTrade Pro, and this little drop down right here is where I'm going to be using different orders. Okay, so you have a limit order, and then you have a stop on quote order, which is two things that I use. I don't believe in market orders. I mean, stop on quote is a market order, but it's a stop loss and it's going to get you out based on the market price. If I'm buying, I want to be limiting in because often I like to be buying on the dips and not just chasing strength into market orders. So I'll put in a limit. If I want to buy this stock at 197, I just put a limit in 197 and 1,000 shares buy. And then if I want to put a stop loss in, I'll just click this drop down right here and then change it to stop on quote and put in the price of 190 to stop out. Key things that I'm looking for in a swing trade. Okay, so I'm looking for a meaningful catalyst. I'm looking for hype from retail traders. I'm looking for block trades. I'm seeing what day of the week and the time of the day as well to buy. And a lot of these things come into play when I'm looking for a swing trade. And it's basically the things that I go over and over and over and over with you guys again on what makes a thesis of a good trade. Okay, so meaningful catalyst. So something that moves the stock up quickly in a high percentage to show to me the catalyst is meaningful. Okay, so like we can see on IBIO today, when the stock moved from 7 to 9 a.m. in pre-market, it showed to me the AI drug catalyst was meaningful. And that's all I need to know. I don't need to predict, that this catalyst is going to be meaningful. I'm going to let the market show to me. And that's something that Tim taught me and you guys, or he should have at least taught you guys a long time ago, that is what is important to know what a catalyst means. So hype from retail traders. We got the absolute legend here, Roaring Kitty, with a picture of some of his positions. You can see he's up 18.5 million on GME from his shares that he bought and his option calls or whatever. And this caused the biggest hype in the market that we've seen in the last decade. In my opinion, this squeeze was unbelievable. But this is what it takes in my thesis. Now, we might not see this type of hype, but if it's maybe 30% or 20 or 10% of this hype or whatever it is, any type of hype is good for a stock you're looking to buy and hold and have patience on. And it will also, all these things grow your conviction on why the stock should continue up. And then block trades. So I have Fannie Mae here, and this is a time and sales tape. Okay, so you have the price, you have the quantity, and the time of the execution of the shares. Okay, and you can see right here that a big block trade went through on Fannie Mae at 158.01, 291,000 shares in 24. Okay, and that was when Fannie Mae was panicking a few days ago, and there was a huge exchange where they put the order through 1 cent above the best bid, and that's a block trade. And you often see stocks reverse after a large position is moved in one direction because big money knows what to do with the stock. I don't care if somebody's buying or selling 100 shares or 1,000 or 10,000 shares, but when you see something relative, also it needs to be relative. Okay, 291,000 shares might not be a lot on a different stock, but you can see that this is printing 1,000, 1,000, 2,000, 4,000. When all of a sudden it's 300,000 shares, you should take notice at what price that's at. Day of the week. Okay, this is also something Sykes always talks about. Friday is the best day to swing and hold a stock overnight because it has the highest chances for a gap up due to the chatter over the weekend. Remember the retail hype. Okay, so the retail hype, they have 2 extra days to talk about the trades, going out and going to party, and they bring up this stock, right? And that person tells that person, and that person tells that person. That's why you see the best gap ups happen over the weekend. Statistically, I've tracked it. Over the weekend, you have the highest odds for a gap up. So time of day, the best time to buy is on morning dips or consolidation in the last hour. I would always stay away from entering a trade midday. Now, you can buy or sell an already open position, but to open a position in the midday, I feel is always the most risky. You should always be looking to start your position at the beginning or the end of the day. Common mistakes to avoid. So jumping into a trade without your own plan. Because if that happens, if you just jump into a trade and you don't have a plan, you're not going to be able to have a good trade on it because it's not your plan, right? And you're going to make emotional mistakes because you're not confident in yourself. Okay. When I'm getting into a trade with my plan, I'm willing to see the trade through, and I'm willing to risk my money on that trade because I am convicted on it. Okay. And then thinking about money invested in the stock instead of the risk amount off the key level. So often a lot of people are like, hey, I'm going to put 10 grand into the stock or whatever. And that's fine. But what is the risk? Where are you going to stop out, right? I like looking at the trade as, okay, I want to buy it at 380 and risk 350. So I know I have 30 cents of risk. And it's just simple math. Okay. So 1,000 shares is $300 risk. 10,000 shares is $3,000 risk. 100,000 shares is 30 grand risk. And using that basis to understand how much you're going to lose or how much risk you have on the table. So changing your plan due to boredom or FOMO, that's something that happens, often. If you're in a trade, also if it's not your trade plan and you jump in and it's boredom or FOMO, it's going to lead to a bad trade. Getting aggressive after one win and giving back your profits due to too high of risk. Okay. So I often see this happen too with a lot of people. Is they'll have one good trade and then all of a sudden they're in another and not even thinking about the risk because they just had a huge win. And if you have a huge win, you're not going to be thinking clearly at all, relying on others, relying on other people to tell you what to do. And then the most important thing I always say is not tracking your own results. Okay. I've always tracked my trades since day one. I have, spreadsheets of thousands and thousands of data points. So I know exactly where I'm making money and where I'm losing money. And it's really just that simple to not do what's making you lose money and then leverage and do more of what's making you money. So it's a common mistakes that you need to avoid when you're trading a system. And I guess I have all these things here. So basically just jumping out of a plane and you don't have your parachute, like you're dead. Okay. Relying on others, cheating off their homework, right? You think you see B, but it's actually A, and you get the question wrong and you get an F. Okay. Here's tracking my own results. So I have each strategy. This is from 2021. You can see, overall, I have how many trades I've taken on the system, how much I've made on the strategy, and how much I've lost on other strategy. So listed first green day is something that I removed from my system because it statistically was making me lose money. This isn't buying something like IBIO today. A listed first green day for me is when a stock comes down after a multi-day run and then it turns back up. So a number 5, quote unquote. But not into a panic dip buy after it comes down. So it's just dip buying former big runners. I statistically was losing doing that on the NASDAQ side. As you can see on the OTC side, I'm really good at this strategy. So just knowing where you're making and where you're losing money.
Are you watching IBIO?
No.
390, baby. Let's go.
Okay, well, we'll check it later. I'm giving a presentation.
I can't stop watching. I don't know how you can.
Okay, so understanding and following my trade alerts. Okay, so what I've been taking a lot of time and I've tried a lot of different services throughout the years. Okay, and I've thought very long and deeply about how this can be the most informational and the best service to provide for students. And really, I just have this want to have, the best thing out there. Okay. So for me, what makes sense to me is tiering the alerts in different color coordinated tiers. Okay. So I coordinated them as gold, green, and orange alerts. So gold alerts is something I am super confident in, and I am loading, and I am, super juiced up about it. Green alert is a good trade, but I don't think it's an A+ trade. And then orange trade is something everybody takes bad trades. Okay, everybody's going to take a trade that you don't think, is the best, and you're going to end up maybe losing money, maybe making money, but at least it's an orange alert, so not to take major risk on it. So that's what I always do with my trades too. Is it A plus? Is it a B setup, or is it a C setup? And if it's an A plus, I want to load it because I'm super confident. If it's an orange setup, I want to take small size because I know the risk is a lot more. So here are some of these alerts, okay, that I would be giving, okay? So SOUN, this is a gold alert. Obviously, I was super juiced up about this one. I told all you guys about it, several weeks ago, and this is basically what I would say. This is an A++ setup. I'm buying near $4 for a swing trade with risk on 350. And something else I'm going to do is I'm going to give different risk levels for different trading styles, okay? So there's going to be 3 risk levels and 3 targets. So the first risk level is going to be the tightest risk level. So you're going to have the best risk to reward because you can load more size with a tight stop. And then the medium risk is going to be where, like, yeah, if it fails this level, it probably should keep failing, but there's a chance it still could come back. And then the last risk level is where if it breaks this level, I am completely done with it, and it really should not come back. It should be dead. And then I'm also going to have price targets for these alerts, okay? So price target of $5.50 for a minimum price target, $6.50 for medium, and $8 for home runs. Okay, it's like single, double, triple, and home run price targets. And with this information, you guys can formulate your own thesis if you see what I'm seeing on these stock charts, okay? And then I'll also put in the price targets and the type of setup it is. And then I'm going to put in the price action and also the fundamental reasoning behind the trade idea. So I said this stock is trading higher relative volume after gapping up on NVIDIA news that the NVIDIA company has taken a stake in this company. And remember, from the webinar, NVIDIA was up 17% that one day, and someone was trading 1 billion shares that week, and it was creating a sideways range, trapping shorts and creating hammer candles. Okay, this is an A+ setup. And then since the market cap is bigger, we need a huge volume like this stock to run, which we had the huge volume. And then I said, if we continue making hammer candles, I get more and more bullish for them to bring the stock over the $5 double top for it to run hard. And then here's a green alert, OCGN. Mentioned this one off the last webinar. I said entry as close to $1. So $1 is going to be key support because it's $1 is the most psychological level out there, right? And that's kind of where you can start into it. And then you can possibly add, once it supports, $1.20. And you have risk levels of 95 cents, 90 cents, or 80 cents being that same grade. And then I said profit target 135 for a minimum target, 150 for medium, $2 for a home run target. I took a picture of the stock when it was at 150, ended up going to 210. It hit the home run target. We're in a market right now where the home run targets are being hit on good stocks, okay? And it's incredible. Sometimes the market's going to change and it's only going to be going to the minimum price target every time, right? And we just kind of got to adapt to what price targets are hitting. And that's why I'm going to give different price targets. Maybe this stock in the summer only goes to $1.40, okay? But in this insane market we're in, the $2 price target is a much more doable price target. And then this stock has been consolidating for weeks on bigger relative volume. As you can see, the relative volume. And the stock has proven to be multi-day runners and also gap up after the breakout. I am unsure why the stock is running, but I have to listen to the technicals and give it a try. So I couldn't put the stock as a gold alert because the fundamentals didn't make sense to me. But with the history of the stock proving to be a multi-day runner, and with the relative volume, and with it being near the key $1 level, it still gets a green alert for me, okay? And then AULT, this is an orange alert, super risky. This is a very cheap crypto stock that has a lot of failed spikes, but is trading a little bit higher relative volume. And I said looking for an entry below $40 with $30 as a minimum stop, 25 as medium, and 20 as aggressive. So the aggressive stop is about a 50% risk. So and then I'd be looking for a double minimum, $1.20 or $2 maximum. So with the crazy dilution on this thing and with the risk being so wide, it's got to be such smaller size for me than something like SLUN or Fannie Mae or OPGN where it's thick and you can make 100% on big size. On this, it's going to be like I'm looking for a double or a triple on small size with wide risk. And I just said we're if we can create some Hanner candles, I'd like to add. I like it because the market cap is small and it's a crypto name and it's been holding up, and it kind of reminded me of CGC before CGC ran. So this is going to be the portfolio of the stocks that I'm in, right? So you're going to be able to see when I added the stocks, what ticker symbol it is, the grade of the stock. Okay, green, gold, or orange, and then you can see if it's active, the current price, the current percent change of where I alerted it, the current volume, entry level, percent change from the entry, and then the targets here, and then the risk levels as well. So it's going to be very detailed. And like I said, I'm helping you guys kind of create your own plan. Okay, I'm not just going to say do this because this is what I'm doing, but I'm wrong all the time too. I'm wrong 45% of the time, 40% of the time with all my trades. So I have this, which helps you create your own plan. Yeah, and I would love for you guys to get on my waitlist. So I'm just going to go ahead and share the waitlist here with you guys. Sorry. Yep, Bryce Davis already shared it. So the announcement's going to be sometime in early May. Like I said, you can see my excitement from this because I know this is going to be good. And I've done a lot of things in the past that I failed on or just haven't been good services. In my opinion, this is a gold alert. Okay, the entire service is a gold alert because I'm super, super excited for this, and I really think it can benefit so many of your guys' trading. And like I said, my goal is to have this be the best of the best. You know what I mean? And like I said, I'd love for you guys to join my waitlist. You guys will get benefits for joining the waitlist early. What does everyone think? Let me know.
Let's go! I'm pumped. It's not a gold alert. I want a platinum alert. I don't know why you think gold is number one. Look at the necklace around you. That's platinum, baby. That's not gold.
I thought it was white gold.
Yeah, maybe it is, but it looks like platinum.
It does look like platinum.
No, it's cool. Look, I've been asking actually the team for this for quite a while because like there's so many different levels to trading, and it's not just like, oh, here's a good play, like one pick. You really do need the color coding. You do need different kinds of thought processes, different targets, different risk levels. Like it's just the next level. And frankly, you're the man for this because I don't have that patience and you do. I'm literally watching the stock that you're in, and I'm more obsessed with the stock. I'm not even in it.
Yeah, looks like it's pulling back now.
Damn it!
Hit 4.
And you didn't sell any?
I said I sold some at like 340.
I know, but this time.
I mean, I was giving the presentation.
You can stop the presentation. You can be like, hold on, let me take 20% profits.
I should have, but I didn't.
I literally stopped the thing, and you're like, no, I'm doing my presentation.
I was into it. I didn't want to get up.
I understand. I appreciate it. That's cool. What's your entry?
260.
Wow, that's crazy.
Yeah. We'll see.
We will see. It's cool. Look, this is the market. This is the market. And this is what I want you guys to understand. Like the way that Jack has made so much is not just by focusing on how to maximize every trade dollar-wise. It's how to use every trade to his education. So like it's a little bit of a mindset shift. Everyone just focuses on money, but you don't focus on the process. And so even if you make money, your process doesn't really get optimized in the long run. You're always stuck wanting more and more and more money without knowing the process as in-depth as Jack does. Do you think that's a fair statement, Jack?
100%.
So like you got to invest in your process, time, money, energy. Then the money comes to you as a result of a highly optimized process over time. If you don't have a process, you might make some, you might make a little, you might lose, but you don't really know what's going on. You really got to dig in deep to seeing what is working and what is not working. And remember, there's two moving targets: what works for you and what works in a hot market or a cold market, right? A hot market is better, not just because there's more money, but because there's more opportunity to learn. And you really need to get example after example, data piece after data piece. That's how you push your process and optimization forward. I know it sounds corny. I know you don't want to do that. You just want money, but this is the machine that gets you there. This is like the nuts and the bolts that people don't want to put in time. Like, Jack, how long do you put in to your spreadsheet? You know, like I tell the story when I was up in New Hampshire and I woke up late and I was like getting cold pizza, and you, Mari, and Jack were at the kitchen table and you were like going over your spreadsheets, and I was like, ah.
Yeah, I think it's at least like 2 hours a day, 1 to 2 hours every single day. But it's been that way every single day for 8 years. You know what I mean? So it's the compounding over time. And some days maybe it's 4 hours or 5 or 6 or 7 or 8 hours. You know, a few times per month, just to catch up on more work and or add something more that I thought of. But it's really just the consistency over time. Okay.
Sorry, I was saying Sisu squeeze 1270, baby. Let's go.
Wow, what an amazing market we're in right now.
I'm not even in Sisu. You guys have to understand, when I'm not in a play, I'm just rooting for more data. All of you need to understand you have this great opportunity. You're in the right chat room, you're in the right program. We've created not just one or two or five or 10 or 20 or even 30. Now we're closing in on 40 millionaires. And it's not a question of if there's going to be more, it's who. Who wants it bad enough? Who is willing to invest the time and energy into their spreadsheets? Say yes or no if you have at least one spreadsheet. We'll keep it very simple. Do you have one spreadsheet tracking your trades? Yes or no? And be honest, it's okay. You know, we can always get better over time. How many spreadsheets do you have, Jack?
I probably have. Well, I do one every year, and they all have like 40 tabs. I have so much data, I don't even know.
Have you thought about like hiring like a data researcher?
No, I need to go through the data myself to see it. So if you just had all the data in front of you, you're not going to learn it as good as if you went and did it yourself. Does that make
I
sense?
agree. I agree with that. I like that. 100%. I still think you should get like a data researcher. You should just go to like an Ivy League school and like find like Goodwill Hunting.
Yeah, I mean, I could see that too.
You know, it's all helpful. I'm sure there's probably going to be like a data like service, like your AI helper in the coming years. Maybe you don't even need a person, but
Yeah.
it's all about data and it's experiencing it too. I should mention, you know, I'm not one for spreadsheets. I'm the failure here. But at the same time, I remember every trade, and I remember more specifically than just the data is my emotions. So I know which plays I like, which I'm really comfortable with, and which plays I'm uncomfortable with. And that's something you guys have to learn too, because like there's different emotions associated with this. Like my trade on CZOO today, where I made nearly $1 a share, roughly $1,000. I mean, that was so easy for me, and I'll post the video tomorrow so you can see it. But like it felt so good, and that was not a trade that Jack would ever take. So you have to really find what is enjoyable for you. Like, who cares if you make $1 million, but like you feel like crap and like you're so stressed and your health suffers, aka like career short sellers. You know, many of them are millionaires, but at what cost? They're gonna die soon, and they're in terrible health and they look terrible. Some people say like, "Wow, Tim, you're in your 40s and you look young." Yeah, because I'm living the life. I'm freaking flying to Dubai tonight. Like, what's better than that? And I can do it because I found my groove. So I really can't encourage you enough to try to find your groove using these spreadsheets. Get excited for Jack's new helping tools. I think it's going to be amazing. Um, it's really just pretty cool to see how much opportunity there is right now. Like Jack, like what if somebody was like totally just confused right now, how do they start testing? What's like a simple pattern that you see working?
The pattern that I just went over.
Gold,
Hmm.
gold alerts.
Gold alerts.
So there's different levels. How many like gold opportunities do you think there are per day, per week, per month right now?
I'd say there's probably 5 to 10 gold alerts per month.
Wow, that's a lot.
Yeah, I'm not catching all of them, but I see them in hindsight.
And that's the thing too. Like it's funny where, how much are you up now year to date and after 3 months roughly?
Um, Not exactly sure with the Fannie Mae right now, but without Fannie Mae, probably like 700 or so.
So Fannie Mae plus or minus might get you to 1 million, but like 300,000 per month roughly on average. And guess what? He's not nailing all the plays. He's missing plays because there's just so much going on right now. Like it's crazy. Jack was actually supposed to be in Japan with me and several other traders. He wisely did not go. All the traders, other than me, because I trade with small size and I think it's fun, all the traders regretted that Japan trip afterwards. Every single one of them. They hated being there. Did you hear about that, Jack?
Yeah, you told me, but I'll hear it again if you want to say it.
No, I mean, look, I was enjoying it because I'm trading like these crappy stocks. Like I remember we were at dinner and I was watching CHNR pre-market and it was already up from like the ones to the threes or something. And I was talking with Alex. Alex is actually one of the first challenge students. Now, he's made a few million and he's mainly a short seller. And I was like, CHNR, you remember this from early in your career? And sure enough, that day, CHNR, I caught it actually, and it went from like I think like 1 to 7 before crashing. But that's the kind of market that we're in, where there's just so much amazing stuff happening that's really going to drive your education forward. And you don't know how long it lasts. Okay. 2022, not so great. 2023, not so great. 2024 has started off fantastic. And the question is, what are you going to do to capitalize on it? Are you going to just be like, well, I'll learn later? Or are you going to be like, wait a minute, hot market, let me freaking capitalize? Like that's what Jack did. You have to understand, Jack wasn't always making, roughly $1 million in 3 months. Like when he first started, we did some good interviews about his backstory where he was like a valet. He was like selling bamboo pillows from China. He tried a bunch of different stuff, but like Jack, when did it really start to click for you and you start to say like, wait a minute, this is better than parking or pillows?
Honestly, once I started making like $10,000 a month in like 2019, that's when I was like, wow, there's really some potential here.
So that's what it takes, making some real money, seeing is believing, right? Before that, like, did your parents give you crap and they're like, you can't do anything?
Yeah, they definitely gave me crap.
And friends,
Mm-hmm.
you
Definitely.
know, say yes in the chat room if you have friends and family who are giving you crap about trading and penny stocks and I'm a scam and trading is a scam. We're all used to it, okay? They're not wrong about the industry as a whole. So understand, like, they're not bad people. They're trying to look out for you. I understand that. But they don't see what you should see inside here, okay? Like, you're inside, you're seeing this stuff, whether it's CZU, whether it's CGC. Someone says Sizu is squeezing more. What are we in the 13s? Holy crap, 1350. Oh my God. I love it. And I'm missing it too because I'm like, talking to you guys, but that's fine. Okay. You don't have to nail every play. Like, how many plays do you think you've missed so far this year, Jack? Solid plays.
Um, Over 100.
In 3 months?
Probably at least 50.
So think about that. You know, like a lot of you are in awe of Jack's profits and his process, as you should be. But even he is not anywhere near perfect. This market offers so many opportunities. It's insane. I picture it's kind of like, I feel like it's the old American dream where, you know, immigrants from Europe and other countries were coming to America because it was the promised land. America isn't necessarily the same, but the internet, the stock market, given all these new tools, this is like, you know, freaking Ellis Island here.
All right, you mind if I hop off here and watch this these couple trades into the close?
Focus on your trades. Everyone, please thank Jack for joining in. I'll keep going. I'll answer some questions because I got no trades because I'm flying in a few hours. But thank you, Jack. Really excited, you know, for you to share more, for you to alert more, and you know, just help your flock. You know, I mean, there's a new series on Netflix with like the 10 Commandments, and I feel like that's you.
Mhm.
You've got the beard. You're looking biblical.
I got the rabbi beard.
No, you shaved, but now you're like a new age rabbi, like moving into the future,
I'm a
right?
20th century rabbi.
Yeah. No, literally, thank you so much for sharing everything, you know, for taking the time, especially away from your trading and wanting to help others. Like, we really can't thank you enough. And
Cool.
it's so gratifying. So thank you again. I'll talk to you
Sounds
soon.
good, man. See you guys later. Thank you, guys. Stay tuned. Early May.
And this is what I'm so excited about. Like, you guys have no freaking idea. Like, Jack is so competitive, and you know, even just when he's creating a tool, like he needs it to be perfect. And you know, again, nothing is ever perfect, but it's going to be pretty awesome. And I'm really excited for him to show you another way. Like I say, my way is not the only way. I'm the impatient way. You see him, he's in a freaking position. Like, I don't know how many shares he has of IBIO, but you know, every second is plus or minus like $10,000, $20,000. And he's focusing on giving you guys a presentation because he's pumped about it and he wants to help people. And I love it. And I'm so grateful for him, and I'm grateful for this, you know, whole community. Um, I really think I know I'm biased, but I really think this is going to be like the most fascinating time as a student over the next year, 2 years, maybe even 3 years. I don't know how long this bull market lasts. Like a lot of short sellers are like, we're going to crash, America's ending, but we're just breaking the previous highs. Like this is inning number one from this breakout, and people don't necessarily have that mindset because we've been down so much and we've come back so far. But like, really, this bull market started on November 1st. How long does the average bull market last? How long does the average stock market bull market last? Let's see. The average bull market lasts 286 days. Okay. So basically the next year, or, you know, now since we're a few months in, and, you know, I don't know exactly when this bull market began. I know there's different definitions, but like November 1st is when the bull market price action really started exploding. So, you know, call it from November to November, maybe even like November to May, but like you basically have like another year. Really, I think that it's just easy. Maybe 2 years, maybe 3 years, depending on, you know, what happens in the world. I don't try to predict that, but like now is the time. I wouldn't be saying this if we're in 2022. In 2022, you can go back and look at the webinars, much less energy, much less opportunity. And I was like, study up, be prepared when the market is better. And many people didn't listen. And now the market is hot and many people are behind because you haven't studied enough and it's confusing. Yeah, Jack was Jack was like trying to like leave. He was like, "Okay, bye." Throw out any questions. I'm answering questions for the next 10 minutes. And as I'm talking, the market is closing higher. Dow's up 441. Like, this is just beautiful. It's absolutely beautiful. And I'm really excited that you guys are here. I know that the webinar software is different. We have no control over that. Literally, the webinar software changed, so we can't go back to the way it used to be. We're at we're beholden to the webinar software, but you can review this webinar on the weekends. Like, maybe it's good for you not to be able to review it right away. Maybe it's good for you to then really appreciate the webinars over the weekend when they get posted. Is Sizu looking like your first red day? I don't know what Sizu was going to do. It's already spiked up more than I thought. I wish I had been watching it, but Jack's presentation, I think, was actually more important than any one stock, and I'm glad I took a really good piece of it earlier today. Let's see. You were talking about earlier, first green day that doesn't have news. You may not trade it. I thought this would override liquidity volume. Yes. For me, I'm a news guy. I like to see news and catalysts. But at the same time, I also recognize that, like Donut, DNUT yesterday had the news with McDonald's, closed strong. It was up another, I think it was, what did it go up to? I think it hit the 18s after hours. And today, big drop, no bounce whatsoever. So you just have to be okay with some of these plays just not bouncing at all. You ride it when it has the momentum, and then you move on to something else the next day. Bryce is going to send out the replay later today, too, for this special presentation. Can you go over detail IBIO this morning? You said it was, this morning I said it was up too much in Amex and not a former runner. Yeah, so, again, this is the thing. A lot of you guys need to understand that Jack is looking at these multi-day setups and he's trying to give them time. I'm looking at specific failures because they lure in the most shorts. They'll probably fail again. That's why Jack doesn't want to touch them. But I don't care whether or not they fail over the course of the day. I'm specifically going for the short squeeze. So IBIO is not a multi-day runner. Jack went over why he actually gave it time. But for me, it's a terrible company up. It usually fails, and that led all the shorts in, okay? You have to understand there's different groups who believe different things. I always say, thank you, short sellers. I always say, we need more short sellers. These short sellers are like dynamite for a lot of these stocks. CZOO is a short squeeze. I'll post the video lesson that I filmed on it today, or I'll post it tomorrow, but I filmed it today. CZOO, is a piece of crap. And earlier this week, it was in the 4s, in the 3s. Now it's 13. It's not because it's such a good company. Short sellers right now spike the stocks the most. So while Ellis and Jack say, no, I don't like these failed one-day runners, they're looking for multi-day setups. I'm looking specifically for terrible companies that will most likely fail, but if they don't fail, they're going to squeeze. And they're going to squeeze hard and fast like I like. Let's see. If you were trading and teaching less, would you be more aggressive in the market? I don't know. I've really found a good rhythm for my life. I need to not travel as much. That's one issue I have. I have an addiction with travel. It's a good addiction, but it's still an addiction. But I really enjoy teaching. For me, part of the only reason why I enjoy Japan so much with these other traders is because I was still trading. I was banking on my quick little squeezes, like on CHNR, while they were getting squeezed on plays like SMCI. If you trade long enough, like I've been trading now for a quarter of a century, you need to find meaning. It's not just about money. So the fact that I'm donating all my trading profits, I'm up nearly 80 grand now year to date, trading small with one laptop, trading from all over and donating it. I've made it meaningful for me. So I can't say would I be different? Would I trade different if I were different? Trading aggressively has no meaning for me anymore. It's bad for my students because I like to teach conservatively. It's bad for me stress-wise because I'm not optimized. And I really don't believe in trading aggressively at this stage for me. You guys, when you're starting, you should trade aggressively. You should learn to really get aggressive with your education. I wouldn't necessarily trade aggressively without education, but like I'm proud of how aggressive Jack is, if that makes sense. How about a dip buy on DNUT? No, you guys have to understand. You have to be willing to let these stocks go from your radar when they don't bounce. DNUT, you literally could have been watching the stock all day and it did nothing. Meanwhile, missing IBIO and CZOO, which are infinitely better. You got to be willing to trade, trade. Like we're traders here. You don't need to stick with one stock. And frankly, I said this on the video lesson today that I'll post tomorrow, but like DNUT surprised me that it didn't bounce. IBIO surprised me that it was so choppy near the open. So when I'm surprised, like I don't like that because it means I was wrong in my analysis. I was wrong about something. So if I'm wrong in my analysis, it's not like, oh, I was wrong, let me trade it more. It's like, whoa, let me pull back. Let me see where I was wrong. So DNUT for me right now is dead. Like it was a great squeeze yesterday, great news. Today, complete opposite. I don't know why, but I accept it. Do I have any special projects in the works? 3 years this month on my Karmagawa documentary in Bali. This is the single biggest project I've ever done. Spent the most money on it, spent the most time. We've built, I think, on camera, nearly 20 schools, 13 homes, 2 recycling centers. Now some also clean water projects and an anti-trafficking charity. So that's my big project. I'm heading back to Bali in a few weeks too. Got to wrap that up, but it's important. David says help with figuring out good risk, whether it's in a channel or rather knowing when to be patient. So like Jack, you saw on his charts, he's drawing channels. For me, I don't trust channels. I don't trust anything. Like IBIO has now squeezed, but it broke out this morning. And had I bought that breakout, I think it was like the 280s and it broke out because I was out like around 270 when it wasn't breaking out very convincingly pre-market. It got up to the 280s, 290s right near the open. And then like 30 seconds later, slammed from 290 to the 240s. Had I been in that breakout, I would have gotten crushed. I would have been out. I don't care about the channels. Jack can give it more wiggle room because he's like plus or minus 10 or 20,000. What does it matter? That's different. For me, if a play doesn't do exactly what I want, I'm out. I don't trust any channels. Not sure if you answered. Struggling with my fundamental analysis. You don't need any fundamental analysis right now. In this market, you got to focus on price action and patterns. A lot of the biggest spikers are short squeezes. They're not wrong about the fundamentals. If you do fundamental analysis, you'll agree the short sellers are right, but they're wrong on the strategy. They have the wrong strategy for the wrong time. That's what's happening right now. So I really wouldn't focus on fundamentals right now. Bama says, just want to thank you for everything, enjoying the process. Awesome. Thank you. It's really a team effort, Jack Kellogg, Ellis, Tim Bowen. By the way, Tim Bowen is giving a webinar. Bryce, can you share the link? If you want another webinar tonight, Tim Bowen is giving one, I think at 8 p.m. Eastern. We just got different strategies, different opportunities, different things around the clock. Let me see. Where is this? What time is this at? 4 hours. Yeah, 8 p.m. tonight. This is tonight, 8 p.m. Eastern. Let me get the link. It really is teamwork, and I'm so excited about Jack really, not just giving webinars, but really, seeing how he can help people. And it's, some people say, oh, there's so much going on. Like, try a little of everything and see what works for you and take a little bit about and kind of like create your own little Frankenstein. Let's see. I can't help it, but I buy the initial spike of a stock spiking with a news catalyst. Any advice? Don't do it. Learn to wait. If you know that's your problem, you can easily do the opposite. If you say, oh, I'm always too aggressive, be conservative. Oh, I'm always too conservative, be aggressive. Learn from your mistakes and do the opposite. You know, there's lots of stocks with catalysts. Many of them don't continue. They're not worth it. You know, I was really happy with IBIO missing that because I would have gotten wrecked had I bought that breakout. I was thinking about buying 5,000 shares at 290 on the breakout near the open, and I literally would have lost like $2,000 or $3,000 within a minute when it just crashed. So you won't see me buy many stocks right at the open. Part of the reason why I sold my IBIO pre-market is because it wasn't doing what I wanted. Even though it's up later, you know, much later, because it squeezed short successfully, at the open, I would have gotten crushed. Let's see. To elaborate, I was in IBIO earlier, set my risk for 10 cents, stuck to my plan, and here we are. But that's fine. You can't be angry, you know, setting 10 cents a share loss and being very safe. You're trading a very volatile stock, you know? If you're trading a very volatile stock with very tight limits, that's what's going to happen. This is part of the reason why I don't trade many of these plays that so many people trade, these most liquid stocks, in all of, you know, these VWAP plays, because I just get chopped out. Linda says you're a great inspiration. Glad to help. Can you provide some perspective on how, looking back on a stock that has been boring for, let's say, a year, how relevant its activity 2 years ago? It also depends on the volume. You know, you want to see where the volume came in the past, because that's where a lot of people are trapped, you know, especially if it's higher. So CGC, like $8 a share, was important. Not that it matters now because CGC just seems to keep squeezing, but it did put up a fight a few times at $8. Wow, CGC now $9.55. Crazy squeeze. But it's good to look back at the past and look where the volume is, just so you understand where like selling might come in. Tim, you do breakouts, panic buys. Are there percent targets? Some of them need to get to catch your attention. Nope, every play is different. I'm just looking for big percent gainers. When will you come to Sweden? I was just there. I was in Sweden. That was one of the countries that didn't have the proper antibiotics that I needed. It was a mess. Do I plan on watching SOUN as a panic dip buy tomorrow? I haven't been watching SOUN. I'm flying tonight, so I'm going to miss the market open tomorrow. I mean, SOUN, after the earnings loss, like, you know, I look at earnings winners, like AXTI was a nice earnings winner. I actually should look at it. Is it still in around 5? Yeah, it's kind of cooled off. Earnings losers like SOUN and BBAI are not so up on my watch list anymore because they're just earnings losers. And it's really tough for them to do much because you see how bad the actual businesses are. Did you say you did not think IBIO would be a multi-day? No, I didn't think IBIO would be a multi-day. I thought that it was just going to be a short squeeze. If you look at the chart of IBIO over the past year, it's terrible. You know, it has these one-day spikes and then it fails. So I guarantee you short sellers looked at it over the past year, 2 years, and it's never held its spikes. So they shorted and they inadvertently created the spike. Oh, you meant to ask if I plan to watch CGC as a panic dip buy. I mean, CGC is just crazy. Like I thought that $8 a share was resistance and it just blew through that. When a play doesn't do what I expect, it's not like, ooh, I want to watch it more. It's like, I don't know what's going on. Let me stay away. And I'm also flying tomorrow. Can you explain why you didn't buy the morning fake out on IBIO in detail? Yeah, I mean, I had IBIO pre-market and it wasn't hitting the highs properly. So for me, I'm buying these stocks, but when they don't hit the highs, I avoid them. Same thing with like KULR. The previous day, I bought it pre-market. It did take out the highs. I took a solid gain. I got back in near the market open and it didn't do what I wanted. So if a stock not never, but if a stock doesn't do what I want, whether it's CGC, whether it's IBIO, I don't look to get right back in. I recognize that I'm wrong somehow in my analysis. Tech Street says, love to see all these webbies and teamwork to overcome PDT. I have 7 brokerage accounts with money. You don't need 7 accounts. That's like, now you have 21 day trades per week. That's more than enough. I would close down half your brokerage accounts. I think many of you would do better by just trading less and studying more. Wait for like Jack's gold alerts. Don't even try to look for like lower odds patterns. You have a lot of studying to do. Okay. You guys have so many DVDs, video lessons, and webinars. I'm working on a new DVD. We have a new update to the boot camp coming out. So I would focus more time on studying than trading. How many monitors are ideal? I just trade with 1 laptop. What kind of plane do you have? I don't even know. I haven't looked. No word on GCTS. I didn't even see what it closed at. Let me see. I don't have my software open. I can't open stocks to trade for some reason. Oh, it's at 40. Yeah, I mean, that was near best case in the 50s. Is ASST an example of clear resistance and support? Let's see. There's not really enough volume, It's only trading a few 100,000 shares at 50 cents. Like, it's trading less volume than I spend a lot on. Look for more liquid plays. Am I multilingual? No. I speak a little Spanish. Mi español es mejor cuando yo bebo mucho, pero no bebidas ahora. AVTX. Yeah, I mean, look, I'm flying tonight. I'm going to miss the market open. Pre-market, I'll have a video on my CZOO thinking, which is kind of cool now that it squeezed like $3 a share afterwards. I didn't know it was going to go to the 13s. That's pretty crazy how much it went up. But at least you'll see my thought process around why $11 a share was so important. Remember, this was a $2 stock just a few days ago. So I wouldn't be chasing anything, but I would be watching and learning from every one of these short squeezes. So thank you guys again for tuning in. Really excited, for Jack. And I think he's really going to help you more than he already does. Already these webinars that he gives are a godsend just for you to think differently. But I think having color-coded alerts and analysis is really going to be, pretty amazing. And all of this is just tools after tools, information after information, trying to open your minds up, trying to get you to think differently, trying to get you to really maximize this market. You can do more than 3 trades per week, day trades, if you have a cash account. You guys really don't need to trade that much. That's what you have to understand. Like, if you wait for really solid setups, I would paper trade every day. If you're under the PDT, I would paper trade. I would say, come up with like a thesis, like I think this is going to morning spike. I think this is going to morning panic. You don't have to actually risk money when you're just starting. When you're just starting, you don't know what's going to work. You don't know what works for you and what doesn't work for you. So you shouldn't be trading aggressively. You shouldn't be trading big. You need to get the data. You need to get the knowledge first. Spend more time studying. I know it's not fun, but you got to learn to sacrifice short-term fun for long-term success. That's really the key. As Jack said, I mean, he said, I was like, when did you start taking it seriously? It was like 2019. That was what, 4.5 years ago? And now he's making, $700,000, $800,000 every few weeks. Like it's crazy what you can really accomplish when you prioritize your education, your spreadsheets, and optimize your process. Then you can size up. Once you have the process down and you know what you're good at, you know what you're bad at, you size up and you're more comfortable. But you can't size up until you find what you're good at and you find what works for you. So every single day you need to be looking what is going to work for you. What's going to help you optimize your process so that in 2, 3, 4 years, you can be having a situation where it's 6 or 7 figures as opposed to just 3 or 4 figures like most people on a trade. So anyways, thank you for tuning in. 8 p.m. Eastern, Tim Bowen. We keep it going. Woo! Let's go. See you guys later. See you in chat tomorrow. I think I get in like in the afternoon, so I'll try to see if there's a good weekend play or not.